we'll get kicked off. Hi, I'm Kamran Ansari from Greycroft. Welcome to the Quarantine Summit, the only conference you'll attend this year in your pajamas, hopefully. And this session is called Thank God for Insurance. And if you don't believe in God, now might be a good time to start. But we have four great panelists here with us. And I'll let them introduce themselves, and I'll just go kind of from the top left of my screen and start with Assaf.
Sure. Hi, everybody. My name is Assaf. I'm the co-founder and CEO of Hippo Insurance. In a very short kind of explanation, we're rethinking home insurance. We're trying to shift to something which is more modern, that the entire coverage, experience, and such things are more modern. And our shift now is to move to something that we call being a proactive insurance company, not reactive. So not just taking care of you if there's a claim that's happening. The question is, can we prevent this claim from happening in the first place? We've been alive for something like 4.5 years, 260 people. That's it.
Over to John.
Hi, everybody. My name is John Swigart. I'm a co-founder and CEO of Pi Insurance. Pi serves small business owners for their workers' compensation insurance needs. We have been in business almost 3 years. We're coming up on our 3-year anniversary in early May. We've been selling for just over 2 years. We're live in 35 states. We have 2 more going at the end of this month. We sell directly to small business owners as well as through agency partners. We have about 165 people in the company, and just had a great first quarter. Did almost $20 million of written premium in the first quarter of 2020.
Great, thank you. And Rashik?
My name is Rashik Adhikari. I'm the founder CEO of Covered by Sage. We are a modern tech-enabled property and casualty insurance brokerage that, put it simply, turns agents into super agents. By leveraging smart technology across the brokerage value chain, we empower top producers and brokers to write more business, strengthen the relationship they have with their clients, and ultimately maximize their potential. With roughly about 80 folks, we've been around a little bit over a year, and excited to joining everyone.
Great, thank you. And lastly but not least, Jennifer.
Hi, everybody. Jennifer Fitzgerald, co-founder and CEO of PolicyGenius. We are an online insurance marketplace and tech platform for all lines of consumer insurance, so life insurance, disability, and personal. About 6 years, 350 people between New York and North Carolina.
Great. Thanks all. So we'll jump right in. I mean, obviously the COVID crisis has impacted every business out there, but in particular, we wanted to understand kind of how it's impacted your insurance businesses and what you've kind of experienced in the last 30, 45 days. So maybe we'll start with Jennifer and go back the same way we came.
Sure. So on the the company front, like everybody else, we had to flip pretty quickly to a fully remote working environment, which is a pretty big lift. We have a sizable customer-facing operations team of over 100 people that we had to flip to remote across 2 markets, but did that and thankful that we were able to do it so quickly. On the business side, we've seen 2 big trends. One is we've seen higher demand than ever for our core products, particularly life insurance. So consumer interest for life insurance has really surged. We typically see a big seasonal spike in January, but that spike is sustained even through now, just driven by what's going on with the COVID situation. At the same time, we've been working closely with their life carrier partners on how they're underwriting the risk, how they're responding to increased volumes with us, even as they've flipped to completely remote environments as well. You are seeing a little bit of underwriting adjustments on the life carrier side as they learn more about the situation and learn more about the health risks, but net, not too much of a change in business operations on the life side.
Can I ask you, Jennifer, will life cover COVID-related deaths? Are you seeing claims?
Yes.
Okay.
Yes, so long as, like if you are actively experiencing COVID symptoms, you can't get coverage until you've recovered. But if you have an in-force life insurance policy, get sick and then pass away from it, yes, it is covered.
Got it. Rashik?
I'll start with sort of the impact on, I guess, the people we serve, because we are in the retail distribution business and focus predominantly on small businesses as well as sort of what we call portfolio personal lines. Look, we're seeing significant impact on the small commercial side, and obviously this is the severity and the scope of this is, at least in our lifetime, quite unprecedented. And so there is a rampant confusion about if any of this is, COVID-19 related losses are covered under any of the policies. I mean, there are implications on workers' comp to some degree, but of course, significant implication on the business interruption insurance. And there's, great deal of uncertainty around what is covered and what's not. And a lot of carriers, look, this is I would say a multi-billion-dollar question that the industry is facing. A lot of the business interruption insurance, the perils that they cover are directly tied to, unless someone purchased pandemic or the viral outbreak rider, it's directly tied to physical loss.
Is that a common rider?
Not a very common rider. It wasn't. It will be a common rider. And look, I mean, the truth is this peril is becoming, I don't even want to use the word unprecedented, seeing SARS, MERS, and everything else we've seen in the last 20 years. And as connected as the world has become, this remains a pretty significant risk. And there is an analogy for how this could go down from a carrier perspective as well as a regulation perspective, and that's the TRIA legislation that passed after 2002, sort of the 9/11 event. But the point I was trying to get at is, look, there is a significant confusion, and I think we should also recognize the amount of loss and hardship this has caused to a lot of the people that we really want to protect and provide the type of coverage. But the bad news, I suspect, is this is going to be a long process to figure out whether these forced closures due to executive orders, which remains sort of one of the big points of debates, is going to be covered by the business interruption insurance, where viral outbreaks are typically excluded. And but that's on that side. With regards to our business, look, we're in the business of really redefining what it means to be a retail agent in a, to Jennifer's point, an industry where distribution is happening predominantly tech-driven, and what it means to be a retail agent is no longer the same as it used to be, and in this case, in point, due to COVID-19. So, that side of the business is doing fine, and we're excited about the ways we can help retail agents. But look, people we want to protect are suffering, and we want to find the best ways to help them.
Great, thank you. Assaf?
Sure. So home insurance is hardly impacted. Usually people think that the biggest challenge is because there's going to be less people acquiring homes, but new acquisitions of homes is a tiny component. It's around 5.5 million homes that are actually switching hands in a year out of 120, 130 million homes that have in the US. So it doesn't impact too much. What we will see, most people have a mortgage, and if you have a mortgage, you need to have your insurance. People are home, so it's a lot easier for people to, for our agents to actually get hold of them. A lot of people are in saving mode, and because they're in saving mode, and it was difficult to get a quote, it becomes easier. So all in all, March was a record month for us. Churn has been reducing on some other stuff. Some channels are going down, some channels are going up. So some channels that has to do with new home purchases, like the builders and mortgage companies on one side are seeing a decline, but there's a lot more refi on the other stuff. So it kind of levels up.
Yeah.
We did decrease a lot of our direct-to-consumer marketing spend. They vary significantly. So Google, where it's just about searches, then the prices haven't went down. On a lot of other channels that have a lot more inventory, TV, radio, Facebook, and stuff like that, you can actually see a decrease in prices because there's a lot less advertisers that are using it now. So there's a lot of interesting mix of stuff. All in all, we haven't massively been impacted. Two other things that we do see is probably a slight decrease in severity of claims. People are home, so they're stopping claims from happening. However, there's a higher wear and tear of the home. The home is not based on people taking 15 showers a day and utilizing the kitchen that often. So you do see some frequency increase. We specifically, we launched something which we call telemaintenance. So we bought a company called Shelter that does home maintenance, and we shifted into a virtual thing. So every Hippo customer, and now even not Hippo customers, can basically call us and we'll help them with maintenance in their home and taking care of their home, etc. So we shifted that to a telemaintenance and remote kind of thing. So we're seeing that there is more cases than usual of people that are basically can't pay. So there is we're extending certain grace period and things like that. So we do see a certain, we're trying to be very respectful and work with our customers to basically help them sustain through that time.
Yeah, I wonder one of the things that's happening, especially when you mentioned home, which is not maybe directly impacted, but as people go through a crisis, maybe psychologically, they're thinking about their entire financial wellness package, and if they have the right insurance policies in place and the right savings and everything else, especially as their 401ks and so forth get hit by this.
Yeah, no, we see from a lot of partners that we have, there is a massive increase in trusts and wills.
Yeah.
Because you're sitting at home and you're like, oh, maybe I should look at it. And there is, people are trying to save money on things that they don't see. We see what's going on with the auto insurance companies. We don't have any money in here from the auto insurance side, but companies returning money because there's no basically losses. Your car is sitting idle at home and there's no losses, so they're flash with cash. They have a 70-75% loss ratio, so they basically started to return money back to customers. So it varies greatly between the different lines in insurance on what's the status.
Great. John, I mean, you guys in the small business space and working with businesses, very curious how you're seeing this play out.
Yeah, so our customers are certainly at the tip of the spear of this whole thing. Just quickly from a business side, we've been work from home now. We just passed our 1 month. We went, on the 13th of March. We had already been planning to move that way, but as things descended that week, we made the decision basically on a Thursday night, and nobody came to work on Friday. So that's the advantage of being a business that you sort of have built very recently. Everybody's fully work from home enabled sort of as soon as they start.
Yeah.
And somewhat surprising to me, our actual productivity across the company went up. We haven't yet suffered from that, the worst enemy is the couch and the refrigerator kind of structure. Everybody's working during their commuting hours instead. We had a great month in March as well. From the customer standpoint, we do insure small businesses across a wide range of industries, small-ish businesses, 6 to 8 employees, a couple $100,000 non-owner payroll, and they are really hurting. They are, and even in the face of that, we had a record March and a record first quarter as we've been expanding our distribution and expanding our footprint. We do expect to see the second quarter be down over the first quarter as more and more businesses really struggle. Workers' compensation is a payroll exposure business. So as payrolls are reduced because businesses either go out of business or they're laying workers off and so forth, our exposure certainly gets less, but the premiums end up being reduced as well. We think we have no idea how long this is going to be. Nobody does, right? And the small businesses are. I think the PPP programs and the CARES Act and some of that stuff is really going to help, but they are suffering, and we hear it every day with customers calling in asking to reduce payrolls, needing payment leniency, and so forth. What we're seeing, as I said, is offsetting that from our perspective is the expansion we've seen in our distribution channel. We're actually seeing our conversion rates go up. We think traditional insurance companies aren't as able to be work from home. They're not as responsive. Some of the agents that we sell through are placing more and more business with us because we're business as usual in terms of responsiveness and our ability to get deals done. So it's going to be a struggle for small businesses for a while until we get on the end of this.
I ask you a follow-up question there. What do you see happening on the claims side? If employees are out sick or if they're laid off, is workers' comp get involved there? What are you seeing that?
Yeah. So this was already mentioned, and the title of this is "Thank God I Have Insurance." The reality is most commercial insurance policies really don't cover this kind of thing. So the ISO forms for business interruption insurance after the SARS outbreak, we don't sell business interruption, but this is sort of the most commonly phrased one, specifically exclude pandemics and virus-driven pandemics that came out after SARS. There is legislative rumblings and regulatory rumblings in certain states about trying to include them post sort of the fact and have them be retroactive. That kind of discussion frequently goes on when things of this nature happen, and they rarely happen. And it was referenced the TRIA, the real way to solve for this going forward is some form of government backstop program where there is surcharges that are sort of built into all the policies. You cannot make this stuff retroactive. It will put the industry out of business. The interesting thing about workers' compensation is the largest employers actually don't buy workers' compensation. They self-insure, much like they do health insurance.
Right.
And so the insurance industry certainly would be opposed to buy that stuff, but the Walmarts, Amazons, UPSs, Targets, FedEx of the world would fight tooth and nail to not have anything sort of be retroactive. In workers' compensation specifically, contagious disease transmission is really just not a covered risk. It's not. Maybe for first responders and healthcare workers, but there's usually a pretty heavy need to tie it directly in the function of your job, and so there frankly is just not that much insurance coverage for this type of event, which is why you've seen such a massive federal response in terms of how we're going to keep the economy stable and how we're going to protect these businesses.
Right. And do any of you guys sell business continuity in your businesses? It sounds like, Rashik, maybe you do or no?
But obviously in a smaller scale, so it typically is part of the commercial, property sort of the package policy. But even then, look, no one can predict viral outbreaks, and this wasn't really top of mind for anyone. And of course, this is going to change that, and I think it probably should change that. I am also sympathetic to John's view on, how do you productize it in a manner where it makes sense for particularly those that are not self-insured to be able to weather it. And the bad news is that those are the people most impacted, and those are the people that need this type of almost like a catastrophic, coverage in scenario like this. But I mean, the answer is we do sell, but very few people, particularly in the universe of folks support, were worried about this and had purchased it. And the other thing is, look, none of the brokers and agents are also really pushing it, because this is once in 100-year event in many ways. Yeah. That's how it's really perceived, and no one thought about it.
Right. You guys all, transitioning a little bit, you guys all work with, I believe most of you, if not all of you, work with larger carriers and reinsurers. Curious how this, last 30, 45 days and maybe go forward has impacted your relationship with them, how you partner with them, how you're seeing them behave. So maybe we'll start with you, Jennifer, and go around.
Sure. I think we have a very good and close working relationship with our carriers, daily and weekly business reviews with all of them. That pace has increased since the start of the situation, especially with our life and disability carriers who are, very much actively looking at the risk, how much risk they're taking on by writing new business, and seeing a surge in new business across the board with all of them. If there is a silver lining in any of this situation, I think it's that it's pushed a lot of the carriers on the life and disability side to make some changes that were long overdue anyway. So resorting to electronic medical records instead of doing the paper request to physicians' offices, thinking creatively about accelerated underwriting, expanding those windows. So there have been, overdue changes in how these carriers underwrite and process new business, and we've been working with them closely on that. So that's one positive development out of all of this. But I think overall, they're all trying very hard to do the right thing for customers. You've seen a lot of, as Assaf mentioned, extended grace periods for customers who've been impacted by the situation. We've seen that across the board. They've been staffing up, customer service hotlines for claims and customer service related questions, being very flexible about underwriting. One thing that, we've had to work through, and we've worked through it, is medical exams for fully underwritten life and disability insurance. So, there was about a week where the ability to do medical exams was in question. Was it an essential business service? Could we still do those if everybody's, sheltering in place? And so we were pretty pleased with how quickly we were able to work with the exam vendors and the carriers to problem solve around that so that we can still, continue to write new business on the life side. But I think it's pushed some positive developments in the industry, which we're happy to see.
Great, thanks. And we'll go to Rashik.
I would echo most of what Jennifer has mentioned. Just to add a couple of things on the PNC side. Most of our carriers, they had a fairly robust business continuity plan, which was great. And I think one thing I can tell you is, look, a lot of these carriers, as I think Assaf earlier mentioned, there are going to be different impacts on the loss ratios, and people are pretty proactive about how can we give back and help the policyholders, because these relationships are long terms and it's just the right thing to do. And those are all positive developments. The unfortunate reality is a lot of the losses with COVID-19 are not going to be covered. At least it's going to be either litigated, and so you're not going to see any type of relief payment. At least from these losses from the carriers, and disseminate, being able to tell that to the policyholder in a proper way is going to be a big challenge. And a lot of carriers are worried about saying, look, it simply wasn't covered, and there is very little we can do. So it is going to be a big lesson for both brokers like ourselves, but also for carriers, to make sure that these points are clearly laid out up front, and the proper exclusion if someone doesn't want to get the coverage is going to be as actively and forcefully mentioned as they do with the terrorism coverage. So I think that's going to be one of the significant changes we're going to see. But I do think the industry has moved towards the right direction, and when all things considered, for the betterment of the policyholders. So that's obviously a good news.
Great, Assaf.
Sure. So first, I'll echo what both Rashik and Jennifer said. I think this is going to be a big turning point to online distribution, period. You have more and more people that this was not the way that they used to communicate, and now they're starting to communicate like that. My mom is using Slack, which is, it doesn't get more crazy than that. So I think it forces people to actually use online distribution. Then they realize that, what, the devil is not bad. It's actually nice. The UI is a lot simpler. People that add a certain barrier, that barrier just fell. So that's in general for the industry and everybody that is more online and digital. I think it's going to be a big shift in the trend. Now, specifically on property insurance, on the reinsurance treaties, it doesn't affect anything. We have, year and 2 year kind of treaties that are moving in cycles of, I think January 1st is the renewal date. It doesn't really have an impact on them. They care about loss ratio. Catastrophe is a bigger driver. what's going on with, hurricanes in Florida, fires in California, hail in Texas is a lot more interesting and relevant to them than that specific incident. And when they entered this risk analysis and underwriting, it doesn't really affect anything. So I don't think we have anything on that side which is impactful. What we do see, which is interesting, is we have a very diverse set of distribution partners. And we started to capture disproportionate amount of the share with a lot of these distributors because we have real-time underwriting, because we bind really, really fast, because we make decisions that are way faster than the comparison. We have several insurance companies that are selling our product, just like we're selling some of their product when we don't have coverage. And we're seeing our proportions of selling via them increase 2 or 3-fold because they don't have any other option. They can't sell. Other insurance companies might as well sell that. We have an agent that still sits and trying to sell and take care of their customers, and they're trying to find that. So we have a better chance to educate our partners on the unique proposition and then shift into that side. All in all, no real impact, with the reinsurance partner, some upside on some of the distribution partners. I think this is where we stand.
Great. And John, I think we'll finish with you as we have just about a minute.
My light was just off, so I'm trying.
Yeah, you guys start moving around, Assaf. You've been too still.
I'm standing usually when I'm talking.
Sorry. Very modest. Any impact. We've made some modifications to the class of business that we'll write in terms of we've stopped new business in those classes that we think may have sort of direct workers' comp exposure on a COVID type claim, like a healthcare type class. We don't really write first responders. That's been the primary thing. We are keeping an eye out for what we think might be COVID related claims from businesses where maybe they've laid off employees. There's sensitivity of that in the workers' comp industry when you have significant layoffs and so forth. But we actually haven't seen any of those yet, but I expect that we will in a little bit. So from our insurance and reinsurance partners, this hasn't really, there haven't been any major changes as a result of this.
Great. Listen, I think we're just up on time. Jennifer, Rashik, Assaf, John, thank you so much. Stay well, and we'll see you all again soon.
Great.
Bye.
Bye.
Thank you.